Hello, welcome to European Open Briefing for Tuesday, September the 18th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. There's a bit of a muted reaction to the latest announcement by President Trump on that 200 billion worth of tariffs that he yesterday confirmed that the US will go ahead in imposing those additional tariffs. We can see, though, although we did see a bit of a dip in market sentiment earlier in Asian trading towards the late Asian session, and as we head into the European Open, we saw a decent, a strong rebound in Asian equities. Chinese stocks closed up by around 2%, and in Europe we can see most indices are in positive territory with the exception of the FTSE 100. So we are seeing a bit of a relief rally, but mainly because those tariffs were already expected by most market participants, but also the fact that the tariffs that President Trump announced will only amount to 10% as opposed to a higher 25% rate, which had been feared by some investors. If you look at major pairs, European currencies are struggling a little bit this morning, both the euro and the British pound slightly lower against the US dollar, but the risk-sensitive Australian dollar has recovered back to above the 0.72 level against the US dollar. The Kiwi is also doing well this morning. We did have the minutes of the Reserve Bank of Australia's September policy meeting, which were somewhat upbeat with regards to the economic outlook with the Australian growth, so that also helped the Aussie rebound. The Canadian dollar is also slightly firmer. The NAFTA talks will be continuing this week, so we could see some volatility for the USD CAD pair should there be some headlines around that. And similarly, we've got the Brexit talks still going on, and that informal EU summit on September 20th. So sterling could also see some volatility in the coming days. Looking at commodities, we can see that both oil and gold prices are the worst performers this morning. Oil is mainly down on the back of concerns about the outlook for demand as those trade tensions between the US and China escalate. But as most market participants appear to be shrugging off those escalation intentions. We can see the Aussie and the Kiwi, both risk-sensitive currencies, doing rather well this morning. And a quick look at the dollar-yen pair. We can see it did pop up briefly above the 112 level before falling back a little bit. It had dipped earlier in Asian trading soon after those tariffs were announced by President Trump overnight in the United States. China has said that they will retaliate, so it remains to be seen how long this relief rally will continue. But for the time being, the fact that there is relative calm to that tariffs announcement, market sentiment is not doing too badly this morning, and we can see that through the Australian dollar, it only dipped ever so slightly earlier in Asian trading, falling to around 0.7140 before jumping higher above the 0.72 handle. President Trump has one thing to watch out for is if China does retaliate. President Trump has said that he will announce an additional $267 billion worth of tariffs, which would pretty much cover the entire Chinese imports into the US. So those tariffs could come on top of the latest $200 billion worth of tariffs should China retaliate. And also last week, if we recall, US officials had invited Chinese officials to the US for talks. It's now uncertain whether or not those trade talks will now go ahead, given that President Trump has just escalated the tensions between the two nations. And finally, quick look at sterling. We can see the pound has been on an uptrend for much of September. It earlier touched a 7-week high of 1.31 1.70 against the US dollar. So overall, there's been positive headlines with regards to the Brexit negotiations. This week, there's an informal summit by EU leaders on September the 20th. We're not likely to get a deal this month nor next month. Most likely any agreement will come by a special summit being planned for November. But we did see another positive headline yesterday. Michel Barnier said that he's considering a simpler solution for conducting border checks at the Northern Irish border using technology, which had earlier said that he doesn't want to use technology in terms of border controls. So that is possibly another sign of the EU softening their position, and that's been positive for sterling. We don't have any major data coming up for the rest of the day. But we do have important data coming towards the end of the week, such as UK and Canadian inflation and retail sales, as well as Eurozone flash PMIs. That's it from me. Thank you very much for watching, and have a great day.